what's good, everybody? Happy Thursday. Yeah, it's Thursday. Yep. Mama's coming into town tonight. I got my mom coming, so got to get home, clean the place up, you know. Mama's got to be happy, have a nice place to sleep. Anyways, before we get started and I share too much more of personal information, you should know that if you're a customer of ours, we did a class 2 days ago about how the wealthy position their accounts, specifically talking about tax advantages, disadvantages, things like that. You should have the replay video in your email. If not, please let me know. We did have a couple emails that got marked as they bounced back. So let me know if you need me to add you to that list and get you that email. Also, check our website for our portfolios. If you've been on vacation or something, we have posted all of our performance on our website for all of our portfolios. One of the first, if not the only advisor I've ever seen do this, and we're not breaking any rules. So we posted it up there for you. Also, our events. I'm probably going to put the events on the homepage now, make it a little more visible, but we have some great events coming up and we are adding to it constantly. So we've got a couple more actually to add to it. So if you want to check that out, great. If you're here watching this for the first time, then you're probably here to hear what the markets did for the day. And today was one of those days, again, kind of getting into the summer vibe of what the markets typically do. A little sleepy, not a lot of activity, a little back and forth, but nothing too crazy. The markets actually started the day higher. Energy was the leader on the day today. Actually, I think it finished the leader. So if you look at energy, oh, that's not it. If you look at energy in general, we'll look at the energy ETF here. Broke to new highs. Very strong start to the day, up 1.5% on the day. The markets initially started higher, like I said, but you had names like Walmart report earnings, which earnings weren't too bad for them. The stock sold off about 2%. That held you back. That was the second worst performer in the Dow, so that kind of pulled that down a little bit. Cisco was your second worst performer in the Dow, as well as not one of the worst ones in the Nasdaq and the S&P. The stock was down about 3.75%. They disappointed on earnings, so that can be an understandable decline there. But as the day went on there, Mr. Trump, good old Mr. Trump, came out and said he didn't think the talks between him and China were going to go that well. It was a whole thing. You know, they went back and forth, did the politics thing. But anyways, that caused the markets to head a little bit lower off their highs. Didn't make a new low, though. It just kind of like wiggled around. Investors just kind of gave up for the day. And so because of that, the Dow was lower by 54. The S&P 500 lost 2. And the Nasdaq 100 lost 15 on the day. Again, Walmart and Cisco having to do with some of that there. Earnings in the retail space continues to be the focus. Look, the spring shopping season is off to a late start. We had a cold winter. And actually, I did a video. I went to Sioux City, Iowa to surprise a client about not even a month ago. And if you watch the video, go on our YouTube channel, we got there as a blizzard hit. We were the only car on the road in this little tiny town in Iowa. So that was like a month ago, not even a month ago, I don't think. So I can understand the late winter for a lot of people. So retail stocks have been a little bit under pressure because of that. One of them being JCPenney. And do I want to go into that? I'm going to save the grumpy thing for last because there's something that's really pissing me off today about a company, and I think I'm going to save that one for last because I'm in a pretty good mood. I had gummy worms today, so I'm in rare form. I'll save the grumpy stuff for later. JCPenney was one of those stocks that suffered today. It has now hit the logo. We always say here that if a stock is trading around our logo on the bottom right-hand side of your screen, it is probably not a good stock to invest in, or you are potentially catching a falling knife. Well, JCPenney lost 12.38% today. The company reported earnings that missed expectations, and they said, you know what, going forward, we don't see much good happening here. I don't know why they would say that, but they did. Revenue was lower by 4.3%. That's a big one. They were expecting revenue to be lower, I think, by 0.3%. So big miss there. Sales came in well below expectations. We're expecting sales to come in at 2%. It didn't. I think it was 0, to be honest. It was very close to 0 if it wasn't. The company tried to blame performance on the longer winter. Of course, every retail company is going to use that to their advantage. And those of them that beat earnings are going to say, hey, we didn't see a longer winter. They're going to make it seem like all the customers are coming to them. So watch out how that happens. Investors didn't care, though. JCPenney, $2.69. We actually had a guy comment on one of our videos about this being one of the bad stocks the other day. He nailed it, right? He called it that it was going to be bad. So props to you for doing that. Shares are now lower by 30% since this time last year. So, whoa, tough time to be an investor in JCPenney. Tesla was lower by a little bit today. I actually thought the stock would be lower by more because Goldman Sachs came out and one of their analysts made a comment. And whenever one of their analysts talk, you typically see the stock have a pretty good action there. The analyst from Goldman Sachs said that Tesla would likely have to raise $10 billion in the next 2 years just to stay afloat. So I don't know if you follow Tesla's sort of cash process, how they raise money. It's a little ridiculous how easy it is for them to get money. And old Jazz Wealth over here just trying to get a little money, you know, to make a bigger space, bigger office space. We're just looking for some investors. We can't find anybody. I should probably call Elon Musk and ask him how he does it. But the report from Goldman Sachs said $10 billion in the next 2 years just to stay afloat, and that they would likely do convertible notes, more cash equity equity raises, things like that, just the stuff they always have been doing. And because of that, this analyst at Goldman Sachs, not me, the analyst at Goldman Sachs predicts 195 in the next 6 months. Very rare that an analyst will give that kind of a time horizon like that. He says 195, so essentially shaving $90 off the price of Tesla in the next 6 months. So if you believe in Goldman Sachs analysts, a short trade on Tesla to 195 seems to be what they're positioning for. Stock barely budged, right? On the day, the stock was down less than 1%, just over 0.5%. I don't think that was a big deal. In other news, if you're still with us here, surging interest rates. Apparently not a big deal for the home buyers because, who was it? Freddie Mac said, well, the 30-year interest rate rose to 4.61% last week. That's a record. And the median price, or I'm sorry, the median day for the of a house before it goes under contract was 36 days. That's a record. You got to go all the way back to 2010 to find something similar to that. And so home prices actually jumped 7.6% in April to a median price of $302,200. That's according to Redfin. That's where I got that from. And this was interesting. Sellers got a record 98.8% of what they were asking for. So what's all those numbers mean? It means that the interest rates are going up, which we'll go over here and look at the 10-year while we're talking about this. Here's the 10-year. Interest rates are going up rather rapidly, and buyers are not walking away. Instead, they're running faster towards the homes that are available to buy them. At least that's what the data shows. So that's pretty interesting. As you look at the 10-year on the chart, the prices have hit new lows today, which means the yields hit new highs. They did push over 3.1%. If you've been following along, they are moving at a rapid pace there for the interest rates. And now we're going to move on to my negative comment of the day. By the way, we're doing the Doe Show. It's coming back slowly but surely. It'll probably be posted tomorrow on our channel if you're familiar with that. We're trying to do that tomorrow. Well, one of the things I want to talk about is Wells Fargo. These guys are about as frustrating as you could ever imagine. They are back in the news again. And I'm not just going back and pulling old news and just telling you guys about it again just to beat up on them. They're back in the news for even more unethical practices, and now we're in the corporate space. So they hit you in personal banking, right? Remember when they ripped you off there, they opened accounts under your name that they shouldn't have, almost everybody. They did it to me. They did that. What was the other thing that they did? They ripped off a pension plan in Kentucky, said they held back fees that they were supposed to pay back to the pension plan. Of course, we know about what just happened, and now they're back in the news because the Wall Street Journal says they improperly altered or added information on documents related to their corporate customers without their customers' consent. This took place last year, and the bank, when the bank was trying to comply with regulatory consent. If you read through the fine print there, the bank was trying to comply with regulatory consent over anti-money laundering controls. And as they were trying to comply, meaning they were trying to make the regulators happy, instead of fixing it and admitting they did something wrong, they said, go in there and change the documents so the regulators won't notice anything different and we'll be just fine. So now, from personal banking all the way to your retirement accounts and all now in any corporate accounts you have, they are messing it up again. This is not a rogue employee. This is not leadership being a problem. This is a culture problem with Wells Fargo. I'm going to just keep talking about this because it's so frustrating. So what we've decided, yes, we are trying to take advantage of that, but also because we want you to get away from them. If you choose Jazz Wealth, great. If you choose somewhere else, that's okay too. Just go somewhere else. Remember what they did? Oh, they were taking too much risk with your retirement accounts. They took so much risk and are currently taking so much risk with your retirement accounts that the Federal Reserve says you cannot take any more money from customers for your retirement accounts. They're not letting them take any more. That's how bad it is. It's not my opinion. The Federal Reserve agrees. So what we're doing now, and I'm going to keep talking about this, making more videos about this. If you transfer an account to us from Wells Fargo, then we'll pay whatever fee you have to pay for them to transfer it. Maybe it's $50, maybe it's $100, I don't know. Whatever fee they charge, we will credit you back for that just to get you out of there. And you can, make fun of me or pick on me for doing that, trying to take advantage of the situation. I am trying to take advantage of it because that's ridiculous. There are other companies that I disagree with their practices, but I won't, it's business. They're doing things differently than I would. These guys are really, really frustrating me. So if you have an account at Wells Fargo, keep that in mind. If you transfer it to Jazz Wealth, we will reimburse you for any cost that is associated for that transfer that they may charge you. So just let me know. We've already had a couple of them. No problem. I have no problem crediting you back because that money, they're going to rip you off one way or another on that. So just frustrating with them. Really kills me what they're doing over there and still getting away with it, by the way. All right. I feel better now. Any questions? If there's any questions, I'm happy to answer them in the thing. It's a little delayed, I know, but we'll fix that, or we'll still answer the questions. Otherwise, thanks for joining us. Kevin says, does one report taxes only after transferring money to their bank account? I'm not sure what you mean about that. Does one report taxes only after transferring money to their bank account? I'm not sure. Where's the money coming from? Trying to convince your coworker to have you manage their investment portfolio. He said he has no idea what he's invested in. Well, believe it, other people make fun of that, but believe it or not, a lot of people don't know what they're invested in, and they're sort of intimidated by the process. That's what we're here for. I want to create an environment where people feel comfortable to start the process with us, and then they learn as they go. So thank you so much for actually telling your coworker about that. Marvin's watching. Oh, hey, Marvin. How's it going? You should listen to your friend. How in the world Wells Fargo still has customers? I have no idea, Nicole. I have never, I'm 36, well, no, I'm going to be 36. So I can't say I've been around forever, but I'm not young either. I have never seen this before. Even during the financial crisis when banks were struggling to stay afloat, when they were struggling to stay afloat, almost everybody was doing the right thing. They were taking the customer side. I can't tell you how many local banks, calls that I got from people, how the local banks went above and beyond. And that, to me, that was the worst of times. How these guys can continue to do this in every category of their business, it just has to set off alarms. If it does not set off alarms for somebody, then you're not paying that close of attention to your money. So I have no idea how they're still around. Incredible, but what are you going to do about it? Oh, from your brokerage account. When you transfer money from your brokerage account to your bank account, if you have gains, if you're transferring earnings from that, then you report that at the end of the year on your taxes. If you're with us, then you'll log in and you'll see a tax form available for you. Any gains that you transferred out of your account, or if it's an IRA and you're transferring prematurely to your bank account, you wouldn't pay the taxes then unless you want us to withhold the taxes. We'll happily, you could tell us withhold 24% or something, we'll do it for you. But otherwise, it'll be on the tax form. You'll report that on your taxes. I hope that helps, Kevin. Yeah, people disassociate. Yeah, I guess it's one of those things you just don't want to make the change. But I changed banks recently. I had a corporate account with Wells Fargo. I didn't have many problems with the corporate side of things. The lady was very helpful. I got to know a lady really well there. They just didn't have everything I needed. So I guess I'm lucky. I didn't notice any bad problems. So I won't bash them for that. But you just, got to make the change. Are you Swedish? Can I open a Roth IRA with you even though I have a Fidelity 401k with the company I work for? Absolutely. We have a lot of customers where they have Fidelity 401ks or maybe Blue Star or Vanguard or something 401ks with their company. We also help you with that. So I will look at your 401k, make sure you are where you need to be. We can catch up once a year, make sure that is all good. I'll try to save you some money there. But we will, of course, work with your Roth IRA. You can definitely do that. Wells Fargo, and by the way, I started listening to Dave Ramsey. All of you guys talk about Dave Ramsey. I had never really paid much attention to him. I started listening to his radio show. That's a grumpy dude, by the way. I get it. He's giving good advice, but woo, he was grumpy. Wells Fargo is probably my latest grumpy button. Yeah, I'm holding back for you guys. Let's put it that way. So it's just crazy. Oh, that's good timing. I already posted that in there. I'm a Bruce Williams fan. If you ever look in the financial, legal, education space, he's no longer around, but Bruce Williams was, to be honest, my idol. That's my muse. That's who I would love to model myself after. Great guy. God, he knew so much, man. He was an amazing, amazing person. That's really my. If you want to talk Bruce Williams, I can talk Bruce Williams all day. But I'm learning Dave Ramsey and his style and stuff. I should follow up with that as much as possible, and I am. I see the value in a stock I own, but I'm so afraid of messing up long-term taxes. It's a consideration, right? You always want to be careful of those taxes. Pay as little as possible. All right, I want to wrap it up there. We are going to hopefully tape the Doe Show now. That should be posted tomorrow. The Doe Show, by the way, is just sort of fun topics. I am going to whine a little bit more about Wells Fargo, but really the idea is like credit and budgeting, things that are coming up, cheap airline tickets, just stuff that I notice that I could share with you guys. It has to do with your dough and not so much about investing, because we do a lot of time with investing here. This is just meant to be more fun, something I've been doing with my brother. He's trying to learn a little bit more about money as well. So hopefully that'll be posted tomorrow if all goes well. I assume it will. And we will talk to you tomorrow. Enjoy, guys. Have a great